Wall Street's big private equity firms could soon be unable to purchase single family homes. Is this a good thing? We're going to find out. For the last 10 years, massive private equity firms have been quietly buying up entire neighborhoods, outbidding regular families, and they've been using all cash offers to do this. And the average family doesn't have that ability. These private equity firms are turning the American dream into a permanent rental trap because that's what they want to do with these properties. They want to put them in a perpetual rent status. They don't want you to own them. Private equity has indicated with that move that home ownership is indeed a good investment. But a massive new federal law just dropped, and that changes everything. It's called the Road to Housing Act. And inside this act is a bombshell clause that aggressively bans institutional investors from owning more than 350 single family homes nationwide.
Georgia is ground zero for the corporate monopolization of housing.
Matthew Nursey with the Housing Justice League is frustrated that the president is playing politics with the solution to one of Georgia's biggest housing problems.
It's deplorable. It is evil.
In a rare show.
All right, this guy's going to say evil several times. I think he's got some other issues going on. Let's look at this clinically and try not to get too emotional about it.
Of bipartisanship, Congress passed the 21st Century Road to Housing Act to cap the number of homes corporations could own at 350, hopefully blunting the impact of the housing market when institutional investors start scooping up single-family properties in mass. But despite mentioning the issue in his most recent State of the Union address, the president said last week he wouldn't sign the bill until Congress also approves his legislation requiring proof of citizenship to vote.
It's a particular kind of evil to hold up this kind of bipartisan legislation on an issue that everyone agrees is one of the most glaring problems.
I'm sure everyone doesn't agree. The other part of this that you have to ask yourself from the standpoint of an investor, okay, we're talking about making money on this channel, right? So if you preclude or prohibit investment firms from owning more than 350 properties, that also trickles down into your pension, into your 401k, because now you're going to see fewer options to invest in real estate without actually having to also accept all of the liability that comes with owning the physical deed to the property, okay? Or, for example, owning the lease to the property.
That we have as an American society.
In Metro Atlanta, 30% of homes are corporate owned, but it's higher in some counties. In Fulton, it's 50%, Henry County, 70%, and Paulding County, 80% of homes are corporate owned.
That's a lot, okay? In that one county, they got 80% of the homes corporate owned. Now, let's examine this. Let's put it under the microscope. When you say corporate owned, that's a big category. That could be BlackRock, and it could also mean mom and pop who own 4 properties. So they didn't specify here.
Companies are crowding out potential home buyers in the market.
Georgia State University professor Taylor Shelton conducted the 2024 study that showed those numbers.
It really does touch essentially everybody. And even if you're not actually somebody who is renting from a corporate landlord yourself, or even in a community with a whole lot of them, they're really able to kind of drive some of the overall housing market trends that we're seeing.
But Shelton notes the federal bill, while it's a good start, wouldn't force corporations to give up the homes they already own.
But it maybe will discourage new entrants into the market.
All right, so 3 things are going to happen. One of them, at least, Trump could, of course, veto this bill. That is the biggest fear of housing advocates that we spoke to today, getting back to square one if he does that. He could also sign the bill into law, which he has not indicated he will, of course, do just yet. Or he could take no action on this at all, and it would default to going into law on July 10th. We'll just have to wait and see what happens.
Okay, so look, Wall Street, under this law, they're being forced to back off, right? Wrong. Because what the mainstream media, what they're not telling you is that this sudden forced exit of billions of dollars could trigger a massive liquidity shock that could completely break down the suburban rental market and cause a chaotic reshuffling of real estate wealth that will end up hurting the exact people it was meant to protect. So let's go over the reality of what happens next. And look, let's also proceed from the premise that home ownership is a good thing. Although we are seeing that concept attacked in certain parts of the country, most notably New York City, uh, Seattle, and LA, where we have socialist local administrations. But home ownership does allow you to build equity and to pass on an asset to your heirs at some point if you choose to do so. So it also allows you to live in the property, right? Have shelter, have shelter. Now, here's the thing with perpetual rent. Rent goes up every year in most cases. The other thing is, with a home, at some point that mortgage will be satisfied. Now, depending on where you live in the country, there are some places where you will get property tax relief after a certain point. A lot of people like to make the argument that, oh, you never own the home because you always owe property taxes. That's something you got to take up with your local and state government. But from the standpoint of the bank, yeah, at some point you do own your home. So to understand why this whole issue is causing a panic in boardrooms across Manhattan, you got to look at how these mega landlords actually operate. And we're talking about the private equity firms here. Companies like Invitation Homes or Progress Residential, they don't just buy a few houses here and there. They own tens of thousands of properties, and they rely on massive economies of scale to manage repairs, handle property taxes, and therefore squeeze out a profit. This is all about making money, whether you're a mom and pop or whether you're BlackRock, right? Or Blackstone. By capping ownership, as this law would do, at just 350 homes nationally, the government isn't just showing or slowing this process down. They're completely decimating these private equity firms' business model. It's basically a total institutional ban because at 350 properties nationwide, I doubt you can get the economies of scale that you need to make this profitable long term. Having said that, because business is all about growth, you got to ask yourself what happens when the biggest buyers in the market suddenly vanish. Mainstream economists want you to believe that home prices will instantly plummet and become affordable overnight. But you got to ask yourself, does real estate really work that way? So, in many of these mid tier suburban markets, institutional investors were the only ones providing liquidity, meaning they were the ones buying houses that needed work, fixing them up, and keeping the market actually moving. So, without these investors, thousands of homes in this type of transition, potentially they're going to sit frozen. Local mom and pop sellers who need to cash out fast to retire or move or address other situations, they're suddenly going to find themselves trapped with no buyers in many cases. In that one county they mentioned where they got 80% institutional ownership, I would have liked to examine that market prior to that because there was something that was going on there that has resulted in such outsized institutional ownership. But wait, there's more. It gets, even worse if you look at it from the standpoint of a rental crisis. Millions of Americans can't afford to buy a home right now. Did you know the average age of the first time buyer in America is 40 years old today? Even if prices drop slightly, many Americans still cannot afford to buy because mortgage rates are still pretty elevated. Okay. That interest rate's still pretty elevated in comparison with recent history. And so these people that can't afford homes, they're depending more so on single family rentals. So if corporate landlords are forced to stop buying, or worse, forced to abruptly liquidate and dump their portfolios, the overall supply of single family rental homes is going to shrink rather drastically. Less supply in the single family rental market means higher competition and higher prices. Okay. Um, so rental prices of the remaining houses could be about to skyrocket in these areas with an appreciable percentage of corporate owned rental homes. Could be about to do something in terms of price appreciation on rentals that we have never seen before. Okay, every time we make a move legislatively, it has an impact somewhere else down the road. And politicians generally don't see that because they want to address immediate problems. They want to be more reactive than proactively looking down the road and trying to find out how this is going to impact the economy, investors, people who are consumers. That's why we get into situations like this. So we could be facing a situation where a lot of people who are counting on rentals are now having to face exorbitantly higher rents in certain areas. The Road to Housing Act, we'll see if Trump signs it or if it goes into effect. It was designed to punish Wall Street, but by suffocating the private capital that needs to keep this, that's needed to keep this suburban housing ecosystem going, the government might have just broken the housing market in a way that they did not anticipate. All right. So again, I am not a fan of the what corporations ultimately want, which would be to own every single home in America and then rent it back to us in perpetuity. That would leave us in a position where we're not able to build any equity, where we're not able to pass on an asset to our heirs, where we lose significant tax deductions. The corporations get all this, and then we're exposed to having to be subject to annual rental increases in perpetuity, even after we've retired and are now on a fixed income. No, thank you. Right. But it is also true that the impact to the rental housing market could be rather extreme. So if you're looking to buy a home or if you are currently renting, you need to prepare for a different real estate landscape over the next 12 to 24 months. How do you do that? Well, we're going to talk about generational ownership and generational living, which I think is the next phase of home ownership in America. And we're going to talk about that in an upcoming video. Hit like, subscribe to the channel, comment as you see fit.